Welcome to ForexTV.com. Today is Tuesday, January 6th. I'm Kathleen Reddington with your New York Forex Market Buzz. The euro falls to a 3-week low on the dollar due to slowed inflation. And now for a look at the latest headlines from the CEP News Desk. The ISM non-manufacturing index moved up to 40.6 in December, an improvement from the all-time low of 37.3 recorded in November and marking the first monthly improvement since August, but still showing contraction. The consensus expected the index to fall to 36.5. Factory orders fell 4.6% in November. This was more than the consensus forecast for a 2.3% drop and following last month's revised 6% decline. And U.S. pending home sales fell more than expected with a 4% decline in November. The index now stands at 82.3, below a downwardly revised 85.7 reading in October. The consensus from economists was for a 1% decline in the month. And today we are joined by Greg Michalowski of FXDD. Hi Greg, how are you doing today?
Good, Kathleen. How are you?
I'm doing well.
Good.
I want to start off with the dollar today. The dollar actually advanced on the Swiss franc today, with traders buzzing about Barack Obama's stimulus plan. However, in the Middle East, news just broke that a UN school was struck by rocket fire, and usually in times of world tension like this, the Swiss franc gains. I want to know what you think is moving this pair, and could the dollar gain be quickly turned around?
Yes, you're absolutely right. I mean, in normal circumstances, and what we saw, I guess, last week when the tensions in the Middle East started, was that the dollar Swiss went down. So there, in other words, the Swiss franc got bid up. However, since that time, we've seen, in fact, over the weekend, basically, I mean, we've seen 4 days in a row with the dollar Swiss has gone higher, and it seems like the market is taking the tensions in that area in stride, if you will, and I think some of the market got a little offsides as well. And when the price action moved above the 200-day moving average yesterday, it seemed to gain momentum to the upside, and that had some follow through today. We are running into some resistance in the dollar Swiss that I see coming at the 113.32 level, and I think that will probably top the range for that currency pair as it battles back and forth between, well, does it want to be a safe haven, or is the dollar going to be better bid in the near term? So I think that's what we're seeing in the dollar Swiss at the moment, but I think the play is sort of winding down in that currency pair.
All right, and the euro fell on both the pound and the dollar. Inflation in the eurozone slowed, kind of moving things around. What do you think is in store for the euro?
Yeah, absolutely. The inflation out of the eurozone came down to 1.6 from what the expectations was 1.8. Last month it was 2.1, and I see euro inflation moving down into the below the single digits going forward. So we did see a sell-off in the euro early on in the day. We also went below the 100-day moving average. That level comes in at 136.15. I think I sent you a chart in regard to that. We also moved through the 50% retracement level of the move up from October 24th to the high in December. So that level comes in at 136.034 area. So now since the market sold off dramatically after going through those two levels and having the CPI, it has corrected today. There was talk about the Bank of International Settlement coming in and buying some euros down in the 133.50 area, and that sort of gave the market a little bit of a bid. And since that time, we've seen the euro move higher, but it is still down against the euro sterling, which is another story in itself, and it's causing sort of a reaction. We're seeing a lot of trading in the cross-currency pairs, and this is causing a reaction in the base currency pairs like the euro and the sterling.
All right, and you just mentioned sterling, and sterling is a big mover and a shaker today. I want to know, one, your euro-sterling strategy and what's going on with sterling for today.
All right, euro sterling. If you recall, I think we spoke last week. It was sitting up around the 98 level. It had risen for 19 out of 21 days, moved up some 27% since October. That's a large move in a major currency cross pair like the euro sterling, and it has an effect. That type of move will have an effect on exports and imports into and out of those countries. So after that sharp move, we started correcting lower, and that correction has taken us down to where we're getting to a support level at the 90 level, and that is a 38.2% retracement level in the currency pair from the lows going back to October around the 7th. So I expect that the euro sterling will take a breather at this level, but certainly with the expectations that the eurozone is going to have to ease their conditions a little bit faster than what they may think. I think the euro sterling might be under continued pressure going forward. But the sterling overall is an interesting animal as well because it has been sold off quite dramatically. We came down from the 200 level all the way down to around the 143 level. And if you look at the hourly chart in the sterling today, which I think I sent you an hourly chart, we have a triple bottom basically down around that 143.5 level in the sterling versus a dollar. The other key lines on this chart is the green line and the blue line, and the blue line is the 100-hour moving average, and the green line is a 200-hour moving average. And as you can see today, which is the last quadrant, or I guess it's like 6 is, or 6 or 7 days there, we went down and tested that blue line and bounced higher. We also made it above the highs from yesterday, and the old high from today, which is the 147.37 level. The current price is around 149.16. We got up to about 149.50. I think the sterling is going to go higher from here. And if you take a look at the daily chart of the sterling, you can see a little reason why. We've come down from that 2 level all the way down to the 143 level. We're trying to find a bottom down here. And those 3 bottoms on the hourly chart suggest to me, and the movement above the key moving averages on the hourly chart, suggests to me that we have some room for a corrective move in the sterling higher. Another clue for me to say that the sterling might move higher is the sterling yen chart. And if you go to that chart, you can see that we have moved down from around a 216 level just a few months ago, all the way down to 129.86 is the low. If you go all the way back to 1995, the low was 129.32. So that's close enough for government work here to suggest that we may see a bottom in the sterling yen. And this, I think, has the potential to move up quite dramatically, and that in turn will bring up the sterling versus the dollar along with it. So that's sort of there's a lot going on right now, Kathleen, in these cross-currency pairs, and a lot of them were sold off or bought to very extreme levels. And I think a lot of traders got off, or perhaps got off sides in those currency pairs, and we're due for some corrections in those currency pairs. What fundamentally is going to propel it, I really don't know, but that's what's been driving the markets, not only in currency markets, but certainly in stock markets, oil markets, so on and so forth. Sometimes the fundamentals don't really support the moves, but certainly the technicals are suggesting that we may be approaching that time where we have some corrections in these currency pairs.
All right, Greg, thanks for being on the show today.
Thanks for having me.
This has been your New York Forex Market Buzz with Greg Michalowski of FXDD. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange right here on ForexTV.com.